You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday, noon Central, 1 p.m. Eastern Time, once again, for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. as well as from the ever-engaging, ever-insightful, at least we tend to think so, Options Insider Radio Network. I want to thank all of you out there who continue to download and listen and stream and drive up our bandwidth bills month after month out there. Of course, if you like what you hear, do keep rating and reviewing out there. Obviously, the show's been running for over a decade, so we have a lot of reviews. But the new ones do tend to be favored by the algorithm out there, and it helps new people continue to discover the show. So if you like what you hear, do keep rating and reviewing out there. And of course, if you need more in your life, and who can blame you? In these crazy markets, today being no exception, you need a little bit of extra content, a little bit of extra analysis, a little bit of extra hand-holding. We're here for you here. Of course, if you want your broadcast week to continue beyond Volatility Views, then head on over to theoptionsinsider.com/pro. You get options oddities after this show. You, of course, get great pro Q&As every week. You get, I just checked the other day, nearly 200 episodes of exclusive content on that pro feed for you folks. You could binge it for over a week, nonstop. And then, of course, a great giveaway. Just gave away our pro trading crate again last week, as well as live access to this and everything else we do here on the network. Early releases of shows, all kinds of fun. Theoptionsinsider.com/pro is the place to go to learn more. As we go around the horn and see who's joining us on the old Volatility Views panel today. First, let's go out to the Southern Volatility Mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir. Not a lot of vol to talk about today. Going to be kind of boring.
Yeah, no, the VIX, anybody who said the VIX is dead is getting a lesson on what the VIX can do when there's actual uncertainty about the market. So we've got a fun one on our hands. And people are getting a little scared here.
Yeah, in the murder trial of VIX, is VIX dead? This is Exhibit A, that it is alive and well out there right now. We'll get to all that fun in a second. Also joining us on the old program today, squeezing in another twofer in the old NASDAQ hot seat. First off, we have our old friend, now four-timer, Mr. Kevin Davitt, the head of NASDAQ Index Options Content over there at NASDAQ. Kevin, welcome back to the Volatility Views program, sir.
Thanks for having me back, Mark. I'm excited that we got a little pickup in vol and plenty to talk about this week.
Plenty to talk about indeed, and joining us to help do just that, we have yet another newcomer to the Volatility Views program. Quite the streak of newcomers we have going these days. He is Vance Harwood, the president of Six Figure Investing. Vance, welcome to the Volatility Views program.
Well, thank you, and thanks for the invitation, Mark.
And Vance, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the options and indeed volatility space, as well as what it is you do over there at Six Figure Investing.
Okay, so my educational background is electrical engineering, and most of my career I was involved with high-tech companies like Hewlett-Packard. I became interested in investing in the late 70s, and in the early 80s started trading options. So been doing that for a long time. In about 2007, I noticed the VIX and was very interested in it because it looked like it might be an actually reliable way to hedge against downturns in equities. So, being the engineer, then one of my interests was, well, how does this work? And definitely with VIX calculation and VIX futures, there was a lot to understand and work on. So, since then, continue doing a deep dive into those. And then obviously when VXX came along in 2009, then that added the exchange traded products to the overall mix. So in 2012, I switched gears and started consulting and a blog, Six Figure Investing. And my focus within that has been, the vol space. I did back testing where basically backward extrapolated the VIX futures back to when they started. They weren't running every month, so I filled in the gaps there and then used that to do back tests on the various volatility ETPs. So take those back to 2004. And I also did some work with taking the VIX 6M and 3M back to 1990 before the CBOE only offered through, I think, like 2007. So just to kind of get a long-term view of how those indicators have done over a multi-decade sort of time frame. So as far as day-to-day, I do consulting, I do blogging, I manage investments for a family office, and I continue to do investigation. In addition to the vol space, I've also been looking at technologies associated with long-term forecasting, like 20, 40-year sort of time frames.
All right, well, you picked a great week to join us, Van, so let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we do just that. We break down the week that was and indeed still is, from vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And kicking off the show here, we got a bit of a sell-off on our hands here. Listeners, of course, it is Jobs Friday, and it does seem like the numbers spooked everybody out there today. It doesn't seem like that long ago. We were floating around the 41.5 level, then 4,100. Then it seemed like 40.5. We were kind of vacillating around that for a while. We get below it, then we get above it again, but 40.5 seemed pretty firm. Then, of course, 4,000, very important psychological level. Broke through that. Then 39.5, we were vacillating around that for a while, get a little bit above it, get a little bit below it. Broke through that. Then 3,900, and now we're looking at below 38.80 now coming into showtime. S&P off about a full percent now. The Dow playing the laggard off a little more than 0.2%. The NASDAQ off well over 1%, about 1.3% now. So NASDAQ, once again, as is wont to do in these types of situations, saying, hold my beer, kid, to the S&P. I'll show you how it's done. Of course, all this on the heels of some interesting numbers coming out this morning. Is bad news again? Or is bad news good news? It's a lot to unpack. Blown away most economist estimates out there for what they were expecting today. So once again, Friday kind of sends the market into a bit of a tizzy. And as a result, we were joking at the top of the show. Everyone was saying for the better part of last year, man, VIX is broken. VIX is garbage. VIX is useless. Can't do anything with it. Can't catch a bib. I'm done with it. Well, today, VIX is saying, hey, if you thought I was sleepy before, I'm waking up today. VIX, when we kicked off the show, 24.5, up almost exactly 6 points, 5.9 points from where we were this time last week. When's the last time we talked about a 6-point pop in VIX over the span of a week? You got to go back a ways, listeners. That is a lot of vol upside, especially in this environment where, like I said, everyone's been saying, oh, vol is muted. We say it on this show. If you have calls in VIX and you get a pop, you probably want to start taking them off because the vol pops are short-lived. This week is putting the test to that theory out there. VVIX, we're just saying on the show, listeners, VVIX, the vol. We were just saying, when it hits 75, watch out, because that's when things start to get a little wild, a little crazy. Chances are it's not going to hang out there for long. Well, man, did VVIX pay attention. When we kicked off the show, VVIX was back at triple digits, 100 exactly, up 25 freaking points from this time last week. So vol is getting a little frothy out there, listeners. So, yeah, I expected it to go back up, not perhaps this quickly, but that is where we are this week. And, of course, our old friend VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100. No skew here, just the facts, ma'am, at-the-money vol at about a 27.20 when we kicked off the show. Up almost 4 points, about 3.85 points from where we were this time last week. All right, let's go around the horn, the opposite of the way we started. Let's go out to Vance first. As our guest, you get pride of place, sir. What is catching your eye in a tumultuous week and indeed a extremely tumultuous end to the week, sir?
Well, I think, it's obviously big jump. I think one of the things that surprised me a little bit is just how hard the VIX futures bid on this, because they've been kind of underreacting to 1% down moves or 2% down moves. So the VIX futures have been reacting very strongly to this. The term structure is at flat at this point. So that's a strong move. And I also noticed the VVIX jump. That's a very dramatic move because I looked at history and I thought it seemed like it was running really abnormally low, and it has been if you look at the last couple of years. But if you look at the long term story, it's kind of been more of a normal stretch. But man, did it ever spring back up?
Yeah, I can't recall. We've been doing the show for a long time. I can't recall, vol going back up to triple digits this quickly. I'm sure it has happened. I'll have to go dig into the archives a bit, but this is quite the move out there in vol. Kevin, same question for you, sir. This time last week we were saying, maybe pay attention. Maybe things seem maybe a little sleepy, but maybe stay frosty. And hopefully they listen, because today is the day where it matters, sir. What's catching your eye out there today, Kevin?
Well, pointing back to last week, something Andrew was sort of lamenting and saying he was interested in structured volatility upside exposure. Hopefully I'm not misinterpreting his words last week, but saying when the VIX is at these levels, your downside, at least in his opinion, is likely limited, and the potential for an upside move like we have seen is significant. And he was talking about structured approaches to express that outlook, and that has come to pass one short week later. What's catching my attention overall? So when I look at performance since Monday, I show the NASDAQ 100 down about 3.8%. And the S&P is down nearly 4.5%. The Q, something that caught my eye yesterday and today, is that the NASDAQ 100 has outperformed relative to the S&P 500. I think that's interesting. The small caps are getting clobbered this week. The other thing that we haven't touched on, but we likely will, is financials and the issue with Silicon Valley Bank and the potential. It's been a while since we've talked about contagion in financial markets, and not with respect to pandemics. And seeing the use of contagion in this context this week has been interesting. Whether there will be contagion, I have no idea. And then looping it back to VVIX, somebody who I've mentioned on here previously and whose work I admire, Chris Murphy, put something out this morning about the move in VVIX relative to VIX itself. And to your guys' point, there's only been a handful of occasions where you saw a bigger move in VVIX. And those were situations where VIX made even larger moves than we saw yesterday. And so the dynamic we've seen this week has been unusual. Historically speaking, vol tends to cluster. And so, in my opinion, this is likely to continue from a flat price level. If the S&Ps hold 3,800, that has been like the longer term support. So when you talked about those big levels at the start of the show, Mark, 3,800 and like 4,150, 4,200 are the bigger range. So I'm going to keep an eye on 3,800 on the downside.
Yeah, a lot to unpack there. Of course, you mentioned SVP Financial, of course, Silicon Valley Bank Group. You don't see members of the S&P 500 taking a 63% shellacking in a couple of sessions very often, off 180 handles over the last few sessions, trading right around 106 right now. That, of course, you're right, sparking fears of some growing concerns out there in the financial sector. Just a lot to unpack. Just about any way we go here with the show today. Mr. Meatball, and also you mentioned the Rock Lobster. He was talking up his strangles. He thought how great it was with low vol getting some cheap VIX strangles. Well, hopefully he put those on last week because those are working out today. Mr. Meatball, sir, what is catching your eye out there in just an explosive vol day, sir?
Yeah, I mean, we've seen the S&P crash through, I think, some important levels. We're through. In the last 2 days, we managed to blow through the 200. We managed to get back into that long-term trend line that dates back to January of 2020. We're targeting lows right now. We're sitting at 3871. And when you look at where we could run into maybe some traders getting a little interested in buying this market, you start to look at around 38 and a quarter. You could see a little bit, 38 and a quarter. You could see a little bit of buying here. But right now, there is some serious fears around this Silicon Valley Bank, the FDIC stepping in. Who's exposed to it? This is the 16th largest bank that is going belly up right now. So there is some real, I think, market risk here. And, the question is what happens over the weekend and how bad does today turn? Because it sets up for the dreaded Thursday, Friday, Monday trade that everyone's always afraid of, being bad Thursday, worse Friday, and then you come in on Monday and everything's broken. That is what we appear to be a little bit of afraid of right now, and I think why the VIX has woken up. The VIX has changed, right? It's not getting the same kind of spikes that it used to when, we get just like a big move in the S&P. But to say that it can't wake up and cascade higher when we have true market events would be wholly incorrect. And I think the point is being proven today as vol and VIX itself just continue to blow higher.
So, Mark, to echo your point on the Silicon Valley Bank situation, I saw something earlier today that in terms of assets at point of failure, so the FDIC stepping in, this is the second largest one historically, and only Washington Mutual is larger. The third one, interestingly, is Continental Illinois Bank and Trust.
I was just thinking about Continental Bank.
You got to go back to 84 4 for that. And in terms of assets, Silicon Valley is like 5x Continental. So this could be a big deal. Time will tell. I also look at, like, I was chatting with some people earlier today, and Contagion, like Allbirds, I think had earnings, but they're getting smoked today. And some of these names that are loosely affiliated with this West Coast banking are taking it on the chin. So opportunities out there for those that can be nimble.
Yeah, it's a rough day to be announcing your earnings. It's just like spitting into the hurricane at this point. But yes, a lot of interesting stuff. That SVIB, will that be the canary in the coal mine? I guess we'll have to keep an eye on that as we keep an eye also on the volatility surface. We've talked before, listeners, about how not just the front portion of the curve moves around, but also the whole curve shifts, and that's pretty much what we're seeing out there right now. Man, it shifted up. We are in another regime. In fact, we just racked it again a few minutes ago, because even between the start of the show and now, things are obviously flying fast and furious out there in the land of the volatility surface. As of a few minutes ago, we had that March future up nearly 5 handles from where it was this time last week. 4.85 handles to be precise. Again, it's been a while since we've seen things swinging that dramatically. The April future up a little over 4 handles as well. So just a big move, in the whole curve, obviously, shifting up quite a bit as well. So indicating perhaps more extreme things afoot. Vance, I'm curious for you. You say you watch VIX, you watch the ETPs. Are you a big watcher of the volatility futures? And if so, what's catching your eye out there this week?
Well, as you mentioned, that there's been a big up move, and the reaction to this downturn is much higher than we've seen before. I think just reading the VIX futures, they've been kind of playing the what they usually do is on a bear market is that most of the action is front loaded on the VIX futures, and then when even though the equities continue to drag down, the VIX will start decaying. So, what we're seeing this week has broken that pattern. There's definitely some bad news, and I don't know who mentioned it, but uncertainty. And I think the key thing with the VIX is the uncertainty in the VIX futures.
Yeah, Vance, I was looking at this morning. I was looking at out of the money puts in the S&P that were $100 out of the money for Monday. At the time, we were trading 38.90. Mm-hmm. The 37.90 puts were $5.50 at the time. They've obviously gone up because we're lower now. Mm-hmm. Do you know where a $100 out of the money put last Friday was trading? Last Friday, we were trading about, I believe, 40.55, right around 40.55. Do you know how much a put $100 out of the money cost for the following Monday? Last Friday, just to put things in perspective for folks, 55 cents.
Oh,
yeah. The curve,
man.
Yeah, the curve has blown up. It has blown up, people. So I think that just kind of puts where we are from a risk perspective into perspective.
We saw that yesterday on our TWIFO show when we were racking up all the same-day paper going up in the E-mini options yesterday, and it was just people just even at the start of the day were loading up on 3,900 puts going out at the end of the day, and those were almost 100 handles out of the money then, and they were just trading fast and furious all day long. So, yeah, it's been fascinating to watch the sudden willingness to take up and gobble up all that crazy downside out there. Not doing it very near dated, same day in a lot of cases. Kevin, same question for you, sir. What is catching your eye out there in the vol surface this week, sir?
Anytime I see a vol curve inverted, I tend to pay attention. Generally speaking, those are the outliers. Those are the exception, not the rule. When I look at VIX or other forward volatility measures on a flat index price or cash level, 27-ish seems quite high relative to what we've grown accustomed to over the past few months. These are situations where if I had on long vol exposure, and I'm not talking my own book here, I would consider taking, half off ahead of a weekend. That would be my inclination. And so I want to see if this inversion, so we have another couple of days until the front month VIX rolls off, whether this becomes something where you see those front month futures go a couple handles over, or we remain flat or potentially, come back into contango in that month 1, month 2 spread over the next few days. So any inversion catches my attention. Where there, I would likely be taking off some long vol exposure if I had it on, and letting the rest roll.
Last but not least, Mr. Meatball, sir, same question for you. Outside of the 100 handle out of the money puts, what's catching your eye out there in the vol surface this week, sir?
As Kevin said, we had a pretty nice flip in the VIX curve. We went from last Friday a nice, beautiful standard contango that says all is well, nothing to see here, to now, if you throw out March, we're backward. We are in backwardation. The cash index getting near 27. March and April pretty much trading on top of each other. April above May, May above June. Little tick up in July, but then August trading below July as well. So the curve is getting extremely angry at the overall market right now, and it's saying things could get ugly from here.
Speaking of things getting ugly, really quickly going out to our live chat, Kevin, this one's for you. You're talking about the risk of contagion. This comes from Z2313. That's a mouthful of the handle, but I like it. He says, for a regional bank that is focused on tech and the bio area, is it really a contagion risk? So, Kevin, he's saying it's more of a very focused bank. He doesn't think it's a contagion risk. Sounds like you think otherwise, sir.
Yeah, I hope that it didn't come across that I thought otherwise. I think it's interesting when you hear the word contagion thrown around. It can be hyperbole, or it could be real. To your point on kind of servicing a niche market, I agree. So just to be clear, I am not intimating that I expect contagion, but we have a fairly tightly coupled financial system in the U.S., and you have a confluence of things that have happened over the course of the past year. I think big picture, we don't know what happens when you see short-term interest rates move up with the velocity that they have, an unprecedented velocity over the past 18 months. And here we are where financials are in trouble, where you see assets moving from, sitting in bank reserves or whatever into treasuries that are yielding 5% with very little duration risk. So you're seeing money move around. You have a relatively tightly coupled system. And in that situation, the potential for contagion exists. Do I think it will occur in this particular instance? Not necessarily. But that's kind of the beauty of being able to use options and fashion a position that allows you to have some wiggle room, right? Or at least that's the way I look at it.
Yeah, it is an interesting indicator. Again, not one we often talk about here, but the things like these can potentially be the canary in the coal mine, right? So certainly something at the very least worth paying attention to. And obviously, as reflected in the stock, they have come for that stock like it's no longer a going concern. So that has been fascinating in and of itself. Speaking of fascinating, let's get on out to the world of volatility options. Let's start in the old NASDAQ VOLQ options. Let's do a quick top 5 out there before we move on to VIX. Number 5, we've got the March 25 puts. Number 4, the March 24 puts. Number 3, we got the March 24 calls. People liking that 24 strike out there in VOLQ these days. Number 2, we got the March 22s. And rounding out the top 10, yet again, we got the March 18 calls. Somebody really likes those. Now, very in the money calls. Much more so than even a week ago when we were joking about it last week. Let's get on out to VIX options. And man, what a week it has been from a VIX volume perspective. Things were kind of sleepy heading into the big Fed announcement a few weeks ago. When the Fed announced that kicked things really into a new gear. We saw the ADV for VIX shoot up nearly 200,000 contracts, and we were putting up some serious numbers. Then things in the last week and a half or so started to quiet down until this week. And then all of a sudden we came in this week, Powell started talking again, and go figure, things started moving again. Volume started ticking up again. It's a little bit misleading. The ADV is still net down on the week, 17,000 contracts to 643. But I got a feeling after today's numbers are factored in, it's going to be a bit of a different story, because right now there are already 1.55 million contracts on the tape in VIX options. It has been, got to go back a ways till we see a day with 1.5 million contracts total, let alone by this portion of the day. That's just crazy town things, again, showing perhaps some concerns lingering out there. Let's do a quick top 10 out there, see what's open for size out there in VIX options. Then we'll break down some of this just tidal wave of paper here. Again, still 9-1 calls over puts out there. If you're looking for the put, you don't have to look very far. It's right there at number 10 yet again. 194,000 of the March 18 puts. And then that's it for puts. Everything else, all calls all the time. Number 9, 198,000 of the March 40s. Number 8, 208,000 of the March 25 calls. Number 7, 244,000 of the March 75s. Number 6, 254,000 of the March 26 calls. Number 5, 259,000 of the May 50s. Our old friend 50 Cent, is he back? If so, he's looking better than he was. I'm still not going to say the 50s are a slam dunk, but looking a little better this week. Number 4, 296,000 of the March 24s. Number 3, 300,000 exactly of the March 30s. Then we keep going. It's our old friend, listeners, who thought they were taking it off. No, they were adding more. Number 2, 409,000 of the June 40s. And number 1, 445,000 of the June 30 call. So that June 30, 40 call spread, listeners, still dominating the tape here in VIX land. I bet you that person feels pretty savvy right now, and yet, as we discussed on the show a few weeks ago, they could have done that better and captured a lot more of this upside move as a result. I'm sure wherever he is right now, recuperating, I think he sent me a photo of himself. He's looking a little bit better out there, the once and future Dr. VIX. Wherever he is right now, he is wagging his finger at that June 30, 40 call spread trader. He's saying, I'm not a fan of that one. Let's see what we're seeing out there from a VIX options perspective this week. Like I said, today, pretty rock'em sock'em robots day, 1.55 million contracts already. Be fascinating to see what we end up with today. Already the big dog out there, nearly 100,000, 92,000 and change of the March 30s. Our old friend, the March 30s. Number 2, 89,000 of the March 18 puts. So those two have already combined for almost as much as a full quiet day out there in VIX some days. Number 3, 87,000 of the March 25s. Number 4, we got some puts on the docket. Got 2 puts on the docket, actually. 82,000 of the March 19 puts. And rounding out the top 5 today, this may actually surprise you, 74,000 of the March 20 puts. So of our top 5 most actives today, listeners, 3 of them coming on the put side. That's kind of fascinating. Yesterday, also a banger of a day, threatening a million, not quite there, but pretty darn close. 950,000. Obviously, the big rally earlier in the session, and then the big turnaround whipsaw sell-off later in the session. VIX likes a good whipsaw, and we saw that yesterday. Nearly a million contracts on the tape. The big dog, much smaller than it is today. 59,000 of the March 24 calls from number 1, followed by 52,000 of the April 30s. Not March, but April this time. Number 3, 48,000 of the March 40s. Number 4, 41,000 of the March 21s, and rounding out the top 5, 38,000 of the March 25 calls. Going out to Wednesday, a little bit quieter day, still a pretty active day, 553,000 contracts. The big dog on Wednesday, 35,000 of the March 22s. Number 2, 28,000 of the March 26s. Number 3, 27,000 of the April 20 puts. There you go, finally get some puts back into action. Number 4, 25,000 of the April 18 puts, and rounding out the top 5 on Wednesday, 23,000 of the June 50s. Maybe somebody inspired by 50 Cent's May 50s saying, I'll take some June, to the tune of 23,000 of those. Tuesday, once again, an M handle sneaking in there, just barely. 1.01 million contracts on the tape on Tuesday. So again, when Powell speaks, VIX tends to put up some numbers. 85,000 was the big dog of the May 30s. So we're piling out to May. Also July. First size July we're seeing for a while. 83,000 of the July 34s, followed by number 3, 83,000 as well of the May 32s, followed by number 4, 83,000 as well. It's the magic number on Tuesday, 83,000 of the June 32s. And rounding out the top 5 on Tuesday, 83,000 of the July 36s. I'm getting the whiff of a vertical here, at least the July 34, 36s here going up 83,000 times. And interesting size as well on the May and June 32s, maybe a bit of a roll action there as well. A Monday was ever so slightly not the laggard. By 3,000 contracts, it managed to beat Wednesday. 556,000 contracts on the tape on Monday. The big dog on Monday, 36,000 of the April 19 puts, followed by 26,000 for number 2 of the March 25s. Number 3, 25,000 of the March 19 puts. Number 4, 23,000 of the March 30s. And rounding out the top 5 on a decently active Monday, 23,000 of the March 22s. Mr. Meatball, this week has kind of been just blowing the doors off from a VIX volume perspective. Obviously, a lot of paper going up here, including what looks like a big July vertical and some other stuff there on Tuesday. What caught your eye in this explosion of paper this week, sir?
Well, we saw a big June 30-40 call spread seller. They're probably not very happy with that sale right now. That would be my bet. Just tons of upside activity. Volume in VIX is just exploding left and right. Today, for example, I mean, just tons and tons of activity. Interestingly, the biggest trade was a seller of the March 18 puts, but we have the July 60s going up, May 50s. We got, it looks like some March 30 calls being bought. Just lots and lots of paper going up right now, trading against what you're looking at.
Yes, indeed. A lot to unpack out there in the world of VIX options. We're already kind of coming up against a lot of paper here to parse on the show today, including out there in the realm of VIX ETPs. Let's get out there to the land of everyone's favorite inverse vol product. It was looking nice, was looking frothy this time last week. Really quickly, Mr. Meepo, I know you're talking about, what was it, the March 17s. Those are looking pretty good. How do those fare for you in SVIX, sir?
You know what? I'm really glad I sold my last batch at $2 because they would be set to be going out worthless. And that is what I'm looking at right now. So
always pays. Be quick on the trigger finger.
Trade. I'm glad I got out.
Yes, it was good timing on your part. Always pays to be deft. We say it all the time on the show. It pays to be deft on the trigger finger on the calls in the vol space. Vance, you said you look at a lot of the ETP universe out there in the volatility space as well. I know products like SVIX, they're somewhat controversial. Some folks love them. They extol their virtues all the time here on the show. Other folks think they're the worst thing to ever happen to the market. They look at Volmageddon in 2018. They think how many people got wiped out with them, and they think they never should have been brought back to the market. Which side of the fence do you fall on when it comes to products like SVIX there, Vance? And then B, what's catching your eye out there in the world of inverse vol this week?
Okay, so with regards to SVIX and UVIX, I believe that these ETPs address the fundamental problem that blew up the leveraged funds in 2018. So, you know, and I spotted this problem in 2012, looking at leveraged funds, and just realized that when these funds were doing their end-of-day rebalancing that they have to do, that both the long and the short funds are having to rebalance in the same direction. So, you know, I saw this problem and was really concerned about it as the AUMs grew on these products. So I was shocked at how the VIX futures went into a liquidity hole. You know, I did not realize it was going to have that kind of magnitude. But, you know, just summarizing, I think the design of SVIX and UVIX, because it spreads out the rebalancing, it deprives anybody that's trying to front run of the information of when those funds are going to go. And then the CBOEs make some improvements too. They've added a volume-weighted 30-second period to the close, and they also moved the settlement time from 4:15 when after all the equity markets were closed, and moved that back to 4 p.m. Eastern time. So I think that helped the robustness of that market also.
SVIX not looking robust from a price level perspective today. Coming into the start of just this segment here, 13.5 down 4.6 handles from where it was this time last week. This time last week, it was threatening new all-time highs north of the 18 handle. Now coming right back down for size, listeners. Speaking of size, it seemed like today was maybe the day where SVIX was going to maybe find its groove and kick into a higher volume tier. The ADV ticking up this week is up to about a little over 1,000, which doesn't sound like a lot when you talk about these other products that are doing millions of contracts here. But for SVIX, that's pretty decent. And then today, we already had about 2,000 contracts up at the start of the show, 2,200. I thought, okay, this is it. This is the day we're going to see 4,000, 5,000, 10,000 contracts or more on SVIX. And yet, it seems they have quieted down about 2,657 contracts on the tape right now. So there was an early surge in SVIX. Maybe things calming down now. Before we get to that, let's just do a quick top 5 out here in SVIX. Number 5, we've got about 600 of the June 13 puts, followed by number 4, also 600 of the March 10 puts. Number 3, 800 of the June 11 puts. Then we get to some larger positions. Number 2, 1,100 of the March 25s. And the number 1 size position still in SVIX, 1,500 of the March 8 puts. Today, the most active contract out there, the June 13 puts, going up 428 times. And then the June 18 puts 400 times as well. So maybe a bit of some vertical action going up out there today. So perhaps not the tsunami of paper I thought there might be out here in SVIX. Mr. Meatball, when you're not busy unloading your SVIX upside, anything else catching your eye out there this week?
Yeah, these ETPs are blowing up. VXX picked a good time to reverse split. It's up 20% today, trading $56.60. Huge move there. UVIX is up a whopping 37.5%, trading $26 now. It's actually above its reverse split price. Even UVXY is up 28% right now. Nice little move, threatening the $7 level. It would be a lot more fun if they'd already pushed through a reverse split. So you've got some fun stuff there. Our old friends Convexity shares, SPIKEX, it's up 17%, and Spiky, remember Spiky? It's up almost 27% as well. So the Spikes future is definitely continuing to show some teeth as well.
Good old Spiky. Everybody loves Spiky. Glad to see it's putting up some underlying movement numbers. I'll have to check the volume out there as well. But good to see things are at least moving out there. Speaking of moving, you mentioned our old friend UVIX. They reverse split a while ago, and we saw it back down to a mid-teens this time last week. And then this week, just going right back up through that reverse split level and then some. A 26.30 as of a few minutes ago, up almost 10 handles, 9.8 handles right now. So, man, the UVIX, when it wants to, when it gets the bit in its teeth, it can move. 23,000 contracts on the tape today. The ADV is only 4,500. So I was thinking maybe today is the day for SVIX, but it looks like today might be the day actually for UVIX. Let's look really quickly, see what's lighting it up out there today. The big dog today, nearly 1,000 of the April 17 puts. So that's a good chunk of volume right there. Followed by about almost 1,000 as well of the March 39 calls. Those would have seemed ridiculous. These are March, so they do still seem a little ridiculous, but they would have seemed absurd a week ago. Now the March 39 sound a little bit less absurd. Let's just put it that way. And also 800 of the March 16 puts. So we got paper pretty much all over the place out there today. Let's look at the top position, see what's open for size out here in UVIX. And again, not a ton, so it's starting to grow, though. So let's do a quick top 3. Number 3, 1,000 exactly, which is interesting, of the March 8 calls. These are some of the pre-split adjusted strikes still, the good old UVIX ones. Number 2, 1,100 of the March 25s. These are end of month March 31st, so that's interesting. And then rounding out the top 3 here in UVIX, 2,500 of the March 25 calls. VANCE, I know you mentioned SVIX and some of the adjustments. Do you have a big use case for UVIX, kind of its sibling product? This is a product you watch a lot?
Well, I think the use case for UVIX is on the options really is if you're looking to catch an equity blow off like we're seeing right now. And I think the use case that's really interesting is that UVIX, I mentioned rebalancing before, but when you have a trending market like this, these leverage funds can outperform their leverage factor. And the reason for that is they're essentially piling on the cash when I think UVIX went up 20% yesterday. And so the issuer of this has to dump a bunch of capital into these funds so that the next day's performance will match the leverage function. So I don't know how many millions of VIX futures contracts. I'd have to look up the numbers, but there were a bunch of contracts that were added last night at close, so that positioned UVIX to outperform its index today, which I'm sure if you look at the last 2 days, it's done better than 2x the underlying index. So I think that's a use case for catching the big blow-offs because you see this big fast ramp, and because the options overperform even their leverage factor, it makes the economics of the hedge look attractive.
Now that is why you bring Vance Harwood on a vol show right there, talking about how these funds operate and why there might be situations where you could expect some outperformance. Well done. I've got nothing to add.
That was an interesting nugget. We don't often talk about funds exceeding their leverage factor, yet in these kind of extreme scenarios.
Yeah. We could talk about volatility drag someday when they're dragging down.
We have talked about drag a lot out here, the outperforming of the leverage factor, not one we always see here on the show, which is kind of fascinating. Mr. Meatball, anything else catching your eye out there in the world of UVIX this week, sir?
Nah. I think they wrapped it up pretty nicely.
Well, you kind of threw the spoiler in there for me, Mr. Meatball. I was going to surprise the folks. I was going to tell them VXX was at a 52, up 41 points from this time last week, and blow their mind before I reveal to them that, yes, it's not just madness in the vol space out there, listeners, but as the Meatball alluded to, VXX on the rampage up there. Actually, it was 52 when we started the show, 57 and about a third now. So it's up another, about 47 handles from this time last week. So just quite a banger. Of course, they did reverse split this week, listeners. A 4-for-1 reverse split happened on Tuesday. So maybe this, for some of you I know were sitting on the fence, you were starting to maybe pay attention to VXX again, given all the debacle that happened last year, maybe starting to watch it, but it's not quite incentivized to come back into the fray. Maybe this will do it. A nearly 60 handle VXX, that gives you a lot of juicy downside to play with, listeners. So perhaps this is the event that will lure you back into the fold here. 58,000 contracts on the tape for VXX right now, listeners. So nothing to sneeze at out there. It looks even more impressive when you see that the ADV is only 63,000, actually moving in the wrong direction, down 5,000. I got a feeling that's going to change after today as well. Vance, we haven't had you on the show before, so products like VXX, they've been frequent discussion points on the show, particularly last year where we saw, Barclays doing all their madness and wreaking havoc with this product as a result. What are your thoughts on products like VXX? Do you still watch them? You still like them? Or are you like perhaps many of our listeners and our guests, after this latest brouhaha with Barclays, you kind of washed your hands of it?
Well, I think Barclays will have addressed the fundamental problem. It was an administrative screw-up. So, those that did that are no longer, I'm confident, are no longer working for Barclays. And, their risk management has to be acutely sensitive to that. So I think the problem that led to the halt of creation has been resolved. And I think probably one of the big attractions to the XX is tax treatment. So I think a lot of people want to avoid the K1s that VIXY has. So I think that's, and also just the very mature options market that VXX has. So, I think it's going to settle down and people will forget. I think people whose strategy doesn't care about the tax strategy, if they're doing long-term puts, then they're going to migrate to VIXY as much as they can.
Yeah, that K1 can be a bit of an unwelcome surprise around tax season for a lot of our listeners out there. Let's just do a quick top five because we are coming up against it, listeners. In VXX, number 5, 13,500 of the March 25s. Number 4, 13,600 of the June 80s, 80. That's a good one. Number 3, 14,000 of the March 15s. Number 2, 15,000 of the March 11s. And the top size position in VXX right now, 17,500 of the March 20s. I got a feeling after today's action, some of that may change. The big dog today, nearly 3,000 of the April 13 calls. Mr. Meatball, anything catching your eye out there in the beloved, I know your favorite vol product, VXX?
Yeah, it's busy today, isn't it? That'll happen when you're up 20 points or when you're up 20%. It is definitely starting to reactivate a little bit. And again, it's an important one to watch because it really does give you a look at what the 30-day blended future is doing. And the 30-day blended future is up a lot today.
And Vance, it is almost crystal ball time, so it's almost time for the most difficult, the most dangerous portion of the show. But before we get into that really quickly, I know you mentioned there are perhaps some new vol products on the horizon, including something I should say coming out of the SIBO based around gamma, sir. What's catching your eye out there?
Yes, the CBOE has listed a new index, and it's called Gamma. And what it's comprised of is the 5 next calendar day or trading day SPX straddles. And then this is delta hedged. So at the end of every day, they take the delta of this overall, 5 set of straddles to even. So it's kind of ironic because even though it's sensitive to gamma, it doesn't measure gamma, and they call it a realized vol index.
I was going to say that's realized vol. It's not gamma,
right? But it's really not realized vol either because if you really I've done some simulations on it, and really what it does is if realized vol is high relative to implied vol, gamma goes up. And so that's somewhat mind-bending, but that's the net effect. It doesn't track exactly realized vol or gamma. It's essentially realized vol versus implied vol. And if you look historically at how this index has behaved, one of the things that's really intriguing is it's much stickier than the VIX. So it will go up when you have a big vol spike. But once the vol starts collapsing, the characteristic is the VIX will drop off, and the VIX futures will drop off pretty rapidly. Whereas the gamma index historically, when they backtest it, does not do that, and that's really kind of intriguing because it's really hard to catch. The right. If you're going long vol, you really have to get out at the right time, or you give back a lot of that. So. This opens up, if it becomes tradable, it gives a long gamma short VIX future sort of a play that might be, a really interesting tail risk sort of a strategy.
So it's basically kind of like owning a straddle and then using a VIX future to eliminate the Vega. Is that how you'd kind of describe it?
Well, that would be the trading strategy. The index itself is just a straight delta hedged straddles.
Okay.
Now, SIBO is known to throw a lot of things against the wall and see what sticks. You think this is going to become a tradable product, Vance? You seem confident.
Well, I think that it's clearly designed to do that. And then Ben Eifert's company, QVR, put out a white paper where they talk about it having investable attributes. And so that implies that they at least think that it's hedgeable essentially without significant slippage, because that's the thing that kills you. Well, it has to be investable just reasonably at all, unlike the VIX, and then you have to look at the hedgeability of the product.
What's the use case for the index? Would it be another product to hedge off variance swaps with? What would be the use case for an institutional desk?
Well, I think if the liquidity was there, I think it allows you to deal with a mispricing on the VIX futures specifically. If they're low relative to realized vol, there's, I'm sure over the counter there are ways to do this, but this would open up to a much broader set of people where you could say, we think VIX futures or VIX ETPs are undervalued relative to realized vol. This gives you a way to play that by going long a fund based on the gamma index and shorting the VIX-based products.
Ever since I got burned on single name VIXs, I'm very much wait and see with the interesting new vol products coming out of SVIB. They all sound intriguing. Whether they make it to market, we'll see. But this certainly sounds intriguing, especially now, Vance, given everyone's fixation on the near-dated portion of the curve, all the zero DTE explosion. A product like this, quote-unquote gamma, could be certainly interesting. But you know what always is interesting, listeners? It's the crystal ball. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the vol gods and see what they hold in store for the coming week. I won't even bother breaking down our or all of our many listener suggestions from last week, because when VIX itself is many handles above where all of our VOLQ predictions were for last week, yeah, we all whiffed. We all missed. I was the highest, and I didn't even have a 20 handle on VIX. So, yeah, none of us saw this extra leg coming, which really has kicked vol into high gear today. So, alas, no winners. I'll have our producers go through all the listener submissions just in case there was some oddball out there who had a 29 even in VOLQ right now. If so, winner, chicken dinner to you. But outside of that small subset, alas, no winners this week. So Vance, all that a long way around to saying because there were no winners last week, you as our guest get the somewhat dubious distinction of going first, sir. What are you feeling for this time next week from a VIX and VOLQ perspective, sir?
Yeah, and I'm going to go out on a limb here, and I'm going to say that I think this is going to be a short-term scare. So I think we'll go into an exponential decline, and so I would say for VIX, I'll guess a 23, and for VOLQ, probably a 26.
So watching the vol coming off, so you're not buying the Monday morning sell-off hypothesis where everyone really gets spooked and VIX blows above 30. Not in.
Well, I think if we see a blow off at the end of the day, it wouldn't surprise me, but it's more of a where's the beef sort of a thing. So if people don't lose a lot of money on this bank, and if the support structure kind of rallies and we don't see contagion, so I'm going out on a limb and saying, well, I think this is going to blow over, but I could easily be wrong.
We shall see. That's why we play the game. Mr. Kevin, same question for you, sir. What are you feeling this time next week for VIX and VOLQ, sir?
Overall, I think my sentiment would mirror that of Vance's in the sense that I don't believe this will froth over into a real significant risk off market, the contagion situation. I think vol would likely come in over the next month, probably not quite as much as Vance said. So I'm going to go 24 quarter on VIX, 27 even on VOLQ. And my last forecast is that this coming week is one of the best in sports. We got Thursday, Friday, NCAA, so I'm predicting upsets and awesomeness.
I was going to say, you've been talking about NCAA. My son and my wife actually went to some of the games at the United Center last night, so they were watching U of I, all the teams getting ready for the big dance. So, yes.
U of I, so disappointing.
You've been bullish on the March Madness for a while, at the very least.
I am, and I'm in Evanston, and Northwestern's making the tournament for only the second time ever, so that's kind of exciting.
There you go. Big plugs, big pushes there for Northwestern. Mr. Meatball, how's UT doing down there? And then what are you feeling for vol this week?
I think UT is going to be a 2-seed or something like that. I don't know.
Are you legally allowed to hook 'em horns yet, or you have to be there 5 years?
I'm going to be watching Villanova in the NIT. Is all I know. Which
Okay.
sucks. But if they're all Mark, have you guessed yet?
I have not, sir.
All right. So if they're all saying lower, I got to go higher, right? Totally. I'm going to go 29.92.
29.92 for VIX, and what do you got for VOLQ? I'm scared to ask.
All right, so VOLQ. Let me give you what I got for VOLQ. I'm gonna go 31.13.
31.13 for VOLQ out there, listeners. So, yeah, we are seeing some interesting levels out there. VIX and VOLQ kind of threatening each other right now from an overall value level. Intriguing stuff. All right, so last but not least, because we are coming up against it here, listeners, we got to get rolling on with the network. Let's go out here for myself. Everyone's feeling a lot less. I'm not feeling as much less as the rest of the people out here. I'm going to say 26.25 for VIX and VOLQ. Still, no one has a 20. I like my, I'll say 28.65 for VOLQ. All right, that music means we are done with another journey through the world of volatility. What an epic journey it was. Vance, I want to thank you for joining us in the NASDAQ hot seat this week. And before we go, sir, if folks are intrigued by all of your analysis, they want to check it out for themselves, where should they go? What should they do?
So for me, Six-Figure Investing is my blog. I tweet on _figure_invest.
There you go. Check them out at the blog and on Twitter. And Kevin, same question for you, sir. If folks want to check out all of the great options content over there at NASDAQ, where should they go? What should they do?
I'm going to reinforce Vance's Twitter. I'm not super active on social media, but I have valued his Twitter content for quite some time. As far as I'm concerned, if you put my name in your favorite podcast search engine or YouTube, you'll probably find some interesting stuff that outlines what I do and how we view the NASDAQ 100 in the investing universe. So, as always, Mark, I appreciate the opportunity to be here.
Well, we appreciate having you on the show and also appreciate the meatball, I should say, most of the time out there. So check him out over there in the land of the pit. Optionpit.com is the place to go. We got to get on out of here, listeners. If you are on the on-demand side, that will conclude your broadcast week with us. Thank you for joining us throughout the week out there. Stay safe this weekend. Of course, if you're on the pro side, hang out. We'll pump some fun stuff into the live chat. We'll be back in a little bit with all things options oddity. Should be an interesting week, so stay tuned for that. Then back again next week. I will be traveling a bit for the FIA Boca show next week, but don't worry. I'll be back in studio for Volatility Views next week. So we'll see you then. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.